Hey guys, what's up? Alec back with the daily stock market, and the stock market has been following a trend this week. Right at market open, what seems to happen is it seems to fall a big amount. We're down like 2% on the day, but then it slowly recovers, and this has happened like the last 3 days in a row, if you guys have noticed. So it is good to see that the stock market ends up recovering closer to the market close. In the last year, we're still up 42%, which is absolutely phenomenal. If you guys saw my video from yesterday. I also posted an Instagram TV, a 4-minute update on cryptocurrency on the daily cryptocurrency. So if you're not following me there yet and you want more crypto updates, make sure you give the daily cryptocurrency a follow, because that's where I put all the long 4-minute, 8-minute updates on cryptocurrency. Now, yesterday's video was a 20-minute video going deep into 2 different companies. So this video, we're going to try to go over at least 10 different companies, because I put out a poll right here about the stock you have the most money in on my Instagram. And it says, what do you have the most money in? And let's kind of review what everyone's saying so you can get an idea of what people are investing in. So we have a lot of ChargePoints here, CSR, BABA, more ChargePoints, a lot of Teslas, BNGO, NEOs. So a lot of electric vehicles. People are banking on electric vehicles in the future. And we have a lot of people responding. So that's the good thing about these polls, is you guys can actually get an idea of what other people have their most money in. Remember, the question is, what do you have your most money in? So a lot of the same ones. ChargePoint's probably the biggest one. I'm seeing a lot of BABAs, a lot of Teslas, and they kind of seem pretty redundant as well. A lot of VOOs, VOO, which is the ETF, obviously, SPY, Amazon, Apple. Those are some of the most popular ones, but as you can see, the list kind of keeps going on and on. So if you want to review it on your own time, I'll speed it up a little bit more here too, so we can actually get to the bottom. So since those are the stocks that you guys have the most money in, I definitely want to talk about them for you guys. So Apple was a very popular one, down 4% in the past week, flat on the month, and up 14% in the last 3 months. I think Apple is one of the best ones to have a lot of money in, so that's a good job if you have a lot of your money in Apple. They're only up 29% in the year, and you really have to have a long-term mindset with Apple. Don't expect them to fly up crazy tomorrow. This is one that you definitely want to invest in for long-term, and if you don't have any shares in yet, the dollar cost averaging strategy is the best thing you can do for Apple, or around $135 per share. I think it's a great place to get in something like Apple. Amazon was after that. They're flat on the week, up 6% on the month, and up 2.5% in the last 3 months, only up 9% in the year. So Amazon, in my opinion, is one that should be up more than 9% in the year. They're a good one to dollar cost average into. And if you can get in right around that $3,100 mark, which they hit pretty recently. That's why price alerts are very important to have on companies. So Amazon's just like Apple, a great company to have for the long term. Last 5 years up, they're up very good. I think they can at least get 100% gain in the next 5 years, which would average out to 20% per year, which is a great goal to have. You can even see right here that we have $1,000 in Amazon, up 5%, and I average about $10 per day into Amazon. And I want to go very briefly into how important 20% per year is. So you should know these 4 things are the most important things to know. How much money are you starting out with? So let's say you're a beginner, you only have $1,000, and you can obviously do this yourself if you want to go to moneychimp.com. Let's say you're able to average in only $200 per month, okay, which would be about $1,200 over the course of a year. And let's say this is your retirement account, you're 20 years old, you're just starting out, and let's say you're going to be 65 years old when you take this out. So we have 45 years to grow, and let's say that we're getting a 0% interest, just so we can see how much of our own money that we put in. So at the bottom on the future value, you see that we have put in $55,000 of our own money. Now let's crank that up to a 20% per year return rate. Wow, look at that, $29 million. So do you understand how powerful 20% per year is? You basically turn $55,000 into $29 million. So once I realized the power of compounding interest, a 20% per year rate, return rate on your investment. That's what really got me into stocks 5 years ago, because I realized the importance of starting young. We talk about compound interest a lot through my program, and I'll probably make a deeper video on this sometime this week or next week, because it is a very important topic. But a lot of people say 20% is very hard, even though I've been averaging 20-40% per year since I started. But let's say you're only going to get 10%. So that $55,000 at a 10% return is still $1 million at the end of it all. So all you need to get is a 10 to 20% per year growth. And with $200 per month, that's it. It's not going to break your bank account. $200 a month can easily grow into $1 million or a lot more of that if you spend the time researching, figuring out how to become a better investor, and figuring out how to look into companies or get someone's professional help. Like my help, for example, I get my students around 15%, 20%, even 30% per year on a lot of my students. If you can even get just 15% per year, when you're 65, you'll have $5 million in your bank account. And think about your parents. A lot of them are probably close to 65, 55, and they probably wish they had $5 million, $10 million in their bank account if they just started younger. Especially our parents, if they started when they were our age, they would be extremely wealthy, because the stock market has done phenomenal in the past 20 to 30 to 40 years. So let me know if you want me to go deeper into the power of compounding interest and go through a few more examples for you guys. You can also research it on your own, the power of compounding interest. It's like the eighth wonder of the world. It's one of the most important things to realize, the power of investing and getting a 10, 20 to 30% per year. So you don't have to get 100%, a month or anything like that. Anyone who's telling you they're getting 100% a month or anything crazy like that, it's a gambler, and they can't do it consistently. But if you can consistently get 10, 15, 20% per year, even 30% per year, that's going to be wonderful for you guys when you go to retire, or even when you go to look at your nest egg in your portfolio 10 to 20 years from now. So another one that we have to talk about is Tesla. A lot of people are talking about Tesla. They own Tesla. It's up 7% on the month, 25% in the last 3 months. So that's a pretty good, great gain in the last 3 months. Remember, at $600, we were buying them heavy if you watch my YouTube videos or if you're in my close friends list. So you have at least a 25% gain on Tesla if you're part of my program or you started watching my channel a while back. Now, with that being said, I think that they can definitely go back to around $650 per share again. I'm dollar cost averaging into Tesla for the long term. You can actually see my account right here. We're only up 11% because this is my account that I dollar cost average in, $25 per day. We've already made ourselves a great profit on just dollar cost averaging in. But you guys know me, I say the same thing about Tesla all the time. Buying under $700 per share or $600 per share for long term, and selling above $800 per share for swing traders too. So you can buy at 600, sell at 800, buy at 700, sell at 800, make some profits, because Tesla typically goes through those price ranges pretty frequently. Tesla's also, if you guys know my opinion on Tesla, I think they're going to be the third to fifth biggest company in the world in the next 5 to 10 years. So they're also one that I'm adding very aggressively into my Roth IRA account. All right, so ChargePoint, I'm happy to see a lot of you guys are investing into ChargePoint very heavily. A lot of your guys' highest portfolio diversity is ChargePoint. I was surprised by that, but I'm pleasantly surprised. I have them at about 7% portfolio diversity. I typically don't go anything over 10% portfolio diversity. I have a very diverse account, because even if you have 10 stocks at 10% portfolio diversity, that only allows you to own 10 stocks. And with my account size, I like to own around 20 to 30, which places me closer to 5% portfolio diversity to be, totally diversified in those 20 to 30 different stocks. Now, with that being said, we have ChargePoint down 12% on the month, 32% on the month. So I actually posted this on my close friends list today about 2 hours ago, and I said, don't forget, that's typically why I like to set a stop loss around 40 to 60% at the most, because the gains that are needed to make your money back are exponential once it gets past like 40% or 50%. And that's why it's also very powerful to buy the dip of around 30, 40, 60% dip. ChargePoint has about a 30% dip. So in order just to get back to where they're at and make up that 30% dip, they need a 43% gain on their stock price. And I definitely think they will get back to where they were just 3 months ago, which was around $30 per share. Okay, now in the short term, if you're a swing trader, between $22, $24, $26 is a good place to take profits. But if you're a long-term trader, I would definitely hold out to around $30 to even $40 per share. I think that ChargePoint can get to in the next 1 to 2 years, which would be about 100% gain in the next 1 to 2 years, which was very, very excellent. Going back to compounding interest. So remember, develop a long-term mindset, lose the short-term mindset, push that aside, and you'll start making a lot more money in the short term. You'll also soon find. Also, don't forget, buy low, sell high. So a lot of you guys are buying stocks that are at 52-week highs, which is never typically a good strategy in my book. ChargePoint is at almost a 52-week low. It's at a strong support. So they're a strong buy in my opinion right now. Even if you go to sell at 24 for a swing trade, that could be a nice 20% gain on a swing trade. Now, a lot of you guys have a lot of money in BABA too, so I want to talk about them. And going back to that buying the dip, remember, they're down 44% in the past year. So they need like a 60% gain just to get back to like that $260, $270 mark. Now, in the next 1 to 2 years, which is a lot of time, 600 and something days, almost 700 days at that point, I think that BABA can easily get back to 200 to 260, even 275 in the next 1 to 2 years. So that would give you about a 60% gain in the next 1 to 2 years. I think BABA is definitely good for a 30%, 20 to 30% per year for the next 1 to 2 to 3 years. Obviously, there is no guarantee, especially with a stock like BABA, with all the restrictions and regulations going on with the China sector. I definitely wouldn't want to have majority of my money into something like, I personally wouldn't want to have majority of my money in something like BABA. I think they're only around 2% or 3% of my portfolio diversity, but I think they're a great one to buy right now with the dip. And, they're a really great price point. I mean, this is basically like traveling back to 2017 and picking some Alibaba up for the same price 4 years ago. It's basically the same price as it is now. And typically, whenever I see that with a good company like Alibaba, or I've seen this happen a lot in the past, it's basically like time traveling 4 years. You always get a massive gain if your portfolio is able to withstand the risk of something like a BABA. And also, if you're a long-term investor in the next 1 to 2 years, I think BABA is a great one to invest into. At around $150 to $165 per share, I think it's a great buy point, in my opinion, for BABA for long term. Now, if you guys notice, I put some of the safer ones in the beginning, like Apple and Amazon, that people have a lot of their money in. But now we're getting into the riskier ones, the China-owned ones, and NIO is definitely on that risky list. They're down 17% in the past 3 months. They're still up 92% in the last year. I was reading an article today. It was something like why Jim Cramer doesn't approve of NIO stock or something like that. You guys can look it up on your own time. I'll actually put the screenshot here so you can see the headline of the article. But it was basically saying that, China's definitely going to want a hand in their pot, a hand in the pot, putting on regulations, restrictions on EV electric vehicles manufactured at a mass production inside of China. Now, that's obviously just sounds like some FUD for the short term, but there's probably some truth behind it that China is going to want to regulate the EV vehicles that are mass produced themselves, and they're going to want to have a hand in it. Who knows what kind of regulations and restrictions go on, but once they see the success in America and in the next 10 years, I think the auto driving will come a long way and electric vehicles will as well. I'm sure they will loosen the restrictions and whatnot, but obviously there is always a risk that is behind China stocks, and you just have to understand that before getting in. You can see a support right around $35 is very popular for NIO. They even go as low as $30, $33 per share. So I think if you're a swing trader, I think there's definitely some potential in the short term for NIO. right at $35 to $37 per share. I think that they can easily go back to $50 per share, and I think they can even hit $60 per share in the next 2 to 3 years. Now, that is a long time, but that's almost 100% gain in the next 2 years, 2 to 3 years, which remember is about 20 to 30% per year, which is what investors like us, we look for that 20 to 30% or more per year. So I hope you guys did appreciate that video, kind of me diving deep into the stocks that you guys have the most money in. I'm sure a lot of you guys are invested into these same stocks that others are, so you probably did appreciate this video. Smash a thumbs up if you did appreciate that. And if you need a little bit more help on understanding how to get 30% per year, 40% per year gains, I have a one-on-one training program that shows you exactly what I look for in a stock, all my tips and tricks, and it also gives you access to all my trades so you can see what I'm buying, what I'm selling, how much I'm buying, when I'm buying it, and be in the loop with everything's going on. It's very good, especially if you're a beginner. I break everything down very simply so you can understand it as a beginner trader, or even if you're a smaller trader that only has $1,000. So make sure you are subscribed for future videos just like this one. Share this video with a friend if you thought it was helpful. And as long as you keep liking these videos and commenting on them, I'm going to keep making these videos for you guys. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.